What keeps you up at night about Bitcoin?
Not having enough Bitcoin. Yeah, I think, I mean, this is kind of a joke, but I think it's really, it's actually a profound point. And I've seen this with myself, and I've seen it with so many people. When I first heard about Bitcoin, and everybody that, when they first hear about Bitcoin, they're always spending so much time thinking about, well, what if quantum computers come along, and what if the government bans it, and what if the internet shuts down, and what if the sun explodes and then we no longer have internet, and you start thinking about all of these scenarios about what might happen and how Bitcoin can fall apart and how Bitcoin can stop working properly. And you know, that's fine, that's cool, it's good to be thinking about those things. But I think there is a very, very high opportunity cost to this kind of thinking, because it means you're not stacking hard enough and you're not worrying enough about the actual real threat, which is you don't buy enough Bitcoin. So I heard about Bitcoin very early. And you know, I heard about Bitcoin, the first time I heard about it, it was probably around $1 or something like that. And I remember thinking, it might be a good idea to buy 100 Bitcoin with $100 and see what happens. But of course, I was too stupid because I spent so much time thinking about, oh well, now obviously the government is going to ban it, and obviously they can shut it down, and obviously they can get the people behind it to change the monetary policy behind it. And so you don't pay enough attention to what's actually going on. You don't pay enough attention to the actual real threat, which is while you're sitting there and pontificating about all the things that can go wrong with Bitcoin, Bitcoin shoots up from $1 to $1,000 while you have no idea what's going on. And you're just sitting there smugly saying, you know, it's going to fall back and it's going to collapse and I'll buy back when it's 10 cents. And then it goes to 1,000. And so I think there is probably way too much worrying about Bitcoin and not enough worrying about not having enough Bitcoin. I see this so often. I see it with so many of my friends, you know, I've been telling them about Bitcoin for a very, very long time, and they have all of these very elaborate, stupid theses that they get from stupid random people on the internet that explain how, you know, all these conspiracies about the government is going to do this, and actually it was the NSA who did it, and actually it was the CIA who did it, and one day they're going to shut it down, and there's a backdoor in the code, and all kinds of stupid nonsense. And the end result of it is they don't have any Bitcoin now, or they have very, very little Bitcoin. So I think that's the that's the thing you should worry about more. But you know, there are probably some things to worry about with Bitcoin itself. I mean, I think it's, for me, you know, there are the technical debates that people talk about with Bitcoin. Maybe there's maybe there are problems with the way that the software is being made. Maybe the current developers are developing bad things on top of Bitcoin. You know, all of this spam that's being added onto the blockchain. Yeah, you could kind of worry about that. It is a bit of a problem. I'm not going to pretend that it's completely irrelevant. It is spam, in a sense. It's filling up the blocks with irrelevant garbage that is completely worthless. And it would be a lot better if we magically found a way that made it so that Bitcoin could only move money and transactions. Because what's happening is that it is filling up the blocks with a lot of data that is not monetary. And so therefore, it's making, you know, it's making downloading the Bitcoin blockchain more expensive. It requires bigger hard drive. It requires more bandwidth. And that likely undermines the incentive that people have to run nodes. And also posting illegal content on it kind of undermines people's incentive to do it, because they don't want to have to, you know, have illegal content, and then who knows what one day happens when your government decides that it's a crime to have the Bitcoin blockchain because it has things on it. So that is, I'd say, maybe the biggest threat to Bitcoin. It is the biggest problem in Bitcoin. It's something that, it's an attack. I think of it as an attack on Bitcoin. Because all of the people who pretend that this is some kind of, oh wow, we're adding new features to Bitcoin, they're fucking morons. It's completely irrelevant, I'm sorry. But you know, Bitcoin, as it is, as a money, is the most important product in the world. The total addressable market for Bitcoin is much larger than every other market anywhere. It's, think about the total market for money is something like $300 trillion. If you add money and government bonds, it's about $300 trillion in total. That's basically, I mean, by far the biggest single total addressable market of anything ever, and probably as big as most of the world's total addressable markets added together. So if you find another niche addition to Bitcoin, where, you know, let's add JPEG receipts onto the Bitcoin blockchain so that mentally retarded people can, you know, trade those things together, you are adding something that is about 1/millionth of the total addressable market. It's a complete rounding error compared to the value of Bitcoin. So it's completely and utterly inconsequential, and it's completely meaningless. And you have to be a complete idiot to be interested in things like this. And so this notion that this is important or that it is valuable, I think is completely ridiculous. It's, I believe, an attack on Bitcoin. It's trying to undermine the decentralization of Bitcoin. But I'm still very optimistic that Bitcoin finds a way around it, because I think the monetary incentive to use Bitcoin is a lot stronger. And I think this notion that this stuff is actually on the blockchain, I mean, you know, if you're running it, you don't even know what's there. You have to run specialized software to go get the data and fetch it and try and decode it and figure out what is actually going on. So this notion that it is really on the blockchain, it's not very true. You know, we still have spam on email. Every day I get spam email, and my email still works. And spam email is more annoying than Bitcoin email, Bitcoin spam, because Bitcoin spam, you know, you don't even see it. You run your node as you want. Your node verifies your transactions, and it sees the information that is relevant for your monetary transactions. So that stuff is just, you know, adding data onto your hard drive. But, you know, hard drives are getting cheaper every day, so it's not that big of a problem, and it doesn't seem to be undermining decentralization in any meaningful sense. And I think the ultimate way this is going to fix itself is that people who waste their Bitcoin on these kind of stupid things are just going to go broke. It's the wonderful thing with everything about Bitcoin. Any alternative to Bitcoin is going to massively underperform Bitcoin, and people who put their money in anything other than Bitcoin are going to just get poorer. That's Bitcoin's security model. It makes everybody who doesn't hold Bitcoin poor. So, you know, it's financial eugenics. If you decide to buy Bitcoin and waste it on JPEG receipts, you're just going to get poor. You know, the people that have invested in this garbage over the last couple of years are down 80%, 90%, 99%, 99.999% in some cases. And there's still another 99% to go, and another 99%, and to keep going down, and it will continue to keep going down. So eventually, I think, you know, it dies as a use case, I hope.
Yeah. Do you think that Bitcoin's price is currently being suppressed, or do you think that we're exactly where we should be right now?
I have a very strong opinion on this, which is that it is completely impossible to suppress or manipulate Bitcoin prices. Because nobody can control the supply of Bitcoin, then there's no such thing as manipulating Bitcoin. So if somebody is selling receipts for Bitcoins that they don't have, I don't consider that as manipulating Bitcoin, because the people you're selling the receipts to Bitcoin to, they are capable of just going and buying Bitcoin directly. So if they choose to buy your fake Bitcoin instead, that's not you manipulating Bitcoin, that's you manipulating them, because they could just go and buy the Bitcoin. So for me, you know, if you manipulate, when you're manipulating a market, the way that manipulating a market happens always is if you have the ability to control the supply of the financial instrument that is there. So central banks manipulate markets all the time because they can make money out of thin air. So the US central bank, they can, like for instance, when the financial crisis happens and there are mortgage-backed securities that are trading at 10% of their face value, the central bank can just print money out of thin air and go buy those things and bring the price back up. And then it can delete that money when it sells them. So therefore, it has the ability to manipulate the supply, and because it can manipulate the supply, it can manipulate the price. But nobody can do that with Bitcoin. the best that you can do is sell people Bitcoin that you don't own. But in that case, you know, you are maybe scamming them, maybe you aren't. Maybe they know what they're getting into, maybe they don't. But in all cases, they're just buying the Bitcoin. You're just buying the Bitcoin. So as far as my node sees, there are no fake Bitcoins. It's impossible to pass a fake Bitcoin. There are only the 21 million, and there are people who buy them. And every single one of these 21 million Bitcoin is, well, the ones that exist, the 19.8 or so that are in circulation, every single one of them is under a public key and it has its own private key. So what the people who own the private key are doing with it, you know, BlackRock has 1 million Bitcoin, but they've sold 2 million Bitcoins. I don't consider that as manipulating Bitcoin. I think, in my mind, you know, why is it that the people who are buying from BlackRock are only buying from BlackRock? Why aren't they buying the Bitcoin themselves? BlackRock is bringing something to the table. So they don't owe me to buy the Bitcoin directly in order for them to pump the price. They've chosen, for whatever reason, to buy indirectly through BlackRock. So BlackRock then decides whatever business model they take on a risk. Maybe they are manipulating, and I'm not saying they are. I don't think they are, probably. I think it's too risky for them to be playing these games. But hypothetically, if they are doing something like this, they're taking on a risk. They're taking on a risk that they have issued liabilities of 2 million Bitcoins, but they only have 1 million Bitcoins, and that can come back and bankrupt them at some point. So it's a risk they take, and we've had people do this with Bitcoin before. You know, FTX, BlockFi, Celsius likely did things like this at some point. I don't consider it manipulation of Bitcoin. I just consider it people playing games with Bitcoin receipts. But as far as Bitcoin is concerned, this is the demand that we have right now for all the Bitcoin that is existing. People have bought this Bitcoin and this is the price. And I don't think it makes any sense to talk about the price being manipulated or needing to change or should be higher. I think generally when you see people talking like that, they are likely over leveraged into Bitcoin and they expected the price to pump and the price is not pumping and they're blaming. Generally, it's the rule with, even in fiat markets, when people talk about markets and manipulation, it's generally because their portfolio is not doing as well as they'd like it to be. But, you know, if Bitcoin at 116K is a problem for you, you know.
Like you said, none of us have enough.
Yeah, that's the real problem you should be worried about. And in fact, if somebody's managing to manipulate it by some reason, think of it as a gift, allowing you to stack harder. Yes.
So it's a bit of a hypothetical question, but my question is when the tipping point comes on all Bitcoin being purchased, it's likely that it's going to be cornered by a very small percentage of the market. What happens then? So, for example, you've got micro sellers of the world are going to corner the market. Instead of having this utopian idea that we all own Bitcoin.
Well, MicroStrategy is not cornering the market. It's MicroStrategy that's buying the big chunk of Bitcoin. They have 3% of the Bitcoin. But MicroStrategy is also selling shares. So when people say MicroStrategy has 3% of Bitcoin, BlackRock has 5% of Bitcoin, it's not true. BlackRock and MicroStrategy don't own it. The shareholders of MicroStrategy own it, and the ETF buyers of BlackRock own it.
True, but that is still a very small percentage of Bitcoin. But it's still institutions, etc.
Yeah, it is, but this is so. I think it's a philosophical approach to the question of fairness. Some people think of fairness as being everybody needs to have the same amount of Bitcoin and we get to live in this utopia where we're all equal. And I don't think that is the case. Money is never going to be equally distributed. That's impossible. If it's equally distributed, then I'm going to buy a sandwich and that's going to mean the sandwich seller has more than I have. So people are always going to be trading and money is always going to be unevenly distributed between people. But for me, this is no concern. I think this is the problem here is thinking that the world's problem is an inequality in money. And for me, that's not the issue. I don't mind that some people have more toys than me. What I mind, and what Bitcoin fixes, is that some people can make money for free. Some people can just print money out of thin air and use it to buy things from others and use it to finance wars and use it to finance all kinds of horrible things. That's what Bitcoin fixes. But we're still going to have inequality. We're still going to have people have more money than others. And that's going to happen because people are going to be more productive than other people. People are smarter than other people. And with Bitcoin, it's going to be to a very large degree determined, maybe for the next century or so, more than just the productivity. It's going to be about how smart you were and how early you understood Bitcoin and how early you grasped Bitcoin. That, I think, is the important thing. And that's, you could call it not fair, but if you understand it, then you are already ahead of 95% of people. You already get it more than 95% of people. You already understand what's going on. And so therefore, you're already stealing a march on everybody. And the moment that you understand this supposed unfairness is the moment that it plays to your benefit. And it benefits everybody, even people who are late. Even if you're the last person to adopt Bitcoin in the world, your fiat goes to zero and you adopt Bitcoin, you're still better off because it's a technological improvement in the same way that, even the people who had the last typewriter factory in the world are still better off today because typewriters were replaced by computers. Because we live in a world that's much more productive with computers. So even the people who used to own typewriter factories, they're better off. Okay, their typewriter factory got written off. They sold it, but they had the capital assets that they could use for other things. The land could be repurposed. The machines might be repurposed for other things. They sell them, they take a loss on them, and then life goes on. And then they buy a computer, and then they move on. So I don't see this as a problem. Yes, some people are going to have a lot of money. Some people will not have a lot of money. But even the people who are not going to have a lot of money, they're going to be working and saving in a world in which they have a hard money that nobody gets to devalue and nobody gets to rob them with. So therefore, they're going to continue to appreciate, their savings are going to continue to appreciate over time, and their life will get better. And generally, this is, I think, it's something, unfortunately, that a lot of people today have, which is leftist thinking, Marxist thinking, the idea that you need to, life is only fair if everybody has the same thing. And this is, I think healthy children outgrow this at around the age of 8 or 9. And the ones who don't outgrow it end up becoming socialists and Marxists and stay at that phase forever. At some point, as a child, you keep looking at your friends and your neighbors and your classmates, and why does he have the nice bicycle? Why is his bicycle nicer than me? And the reality is, no matter who you are, there will always be kids who have things that you don't have. And so happiness will never come from nagging at your parents and telling them to get you all the things that all the other kids have. No matter how rich you are, there will always be kids who have things that you can't have. And so therefore, happiness will come in enjoying the things that you have and focusing on yourself rather than continuously comparing yourself to other things. Comparison is the joy, is the thief of joy, as they say. Yes.
Kind of a follow-up to that, do you think that some of the circular economies that are popping up in places that have the most benefit from Bitcoin, so I'm thinking of, there's one in Peru, for example, my understanding is there's a lot of initiatives in Africa, there's money adoption there, and possibly even ways to get money into places that are, currently experiencing war. Do you think that that's enough to sort of redistribute the wealth between the global north and south at this point, or are those are they going to have any impact in the long run?
It's an interesting question. I remember several years ago, I used to think that places like Venezuela, Zimbabwe, Lebanon, because their currencies are collapsing, because of hyperinflation, they would be the first to adopt Bitcoin. And I thought, there's something nice about it. This was how I used to think of it in around 2017, say, 2018. That people in Lebanon are going to learn about Bitcoin a lot earlier than JP Morgan. And I remember, when Jamie Dimon would always go on TV and say, Bitcoin is stupid, Bitcoin is horrible, Bitcoin is a terrible thing. And I was very happy about that. For me, this was great. All of the people who benefit from fiat, all of the bankers, the central bankers, the people who have been essentially a blood-sucking parasite on humanity for the last century, living off of money printing, they are not going to understand Bitcoin because for them, that is broken money that doesn't work because it doesn't allow them to do what they think money is for, which is how to rob other people by inflation. So for them, money is a tool for government printing the money to rob others of wealth to give us. And so for them, if you tell them, here's Bitcoin, it's going to take that away, they're not going to get it. Whereas people in Venezuela will get it. Unfortunately, it doesn't seem to have been the case. So people in Venezuela, when they use Bitcoin to get around sanctions or to get around these kind of things, they might use it, but they use it as a transactional means rather than as a saving. And it turns out that essentially the people that have gotten Bitcoin most are the people who already have savings. So this is the, ultimately, even if Jamie Dimon puts 1% of his portfolio in Bitcoin, it's going to be a lot more than the million people in Venezuela or Lebanon or Zimbabwe putting all of their wealth in Bitcoin, because maybe not all, but some of them, because a lot of these people just don't have wealth and they use Bitcoin as a transactional means. So yeah, okay, it helps you get around sanctions, but it doesn't give you the real benefit of Bitcoin. The number go up, the appreciation, the wealth preservation and appreciation aspect of it. So, and I thought, my expectation was that Bitcoin is going to be adopted a lot more by individuals and a lot less by institutions. We're not going to have governments getting in. We're not going to have large Wall Street companies getting in. We're not going to have BlackRock. We're not going to have ETFs. I thought we'd have millions of people in places like Venezuela using Bitcoin before we get something like an ETF, saving in Bitcoin and holding Bitcoin. Turns out I was wrong. It just looks like, first of all, if you're living under hyperinflation, I know this because I was living in Lebanon and I was telling everybody about Bitcoin. In these kind of situations, people just don't have liquid wealth. And because they don't have liquid wealth, money is just about moving things around and buying things and selling things. And so if you don't have long-term savings, you're not going to stack a lot of Bitcoin. That's the sad part of it. And the people who have long-term savings are the people who have generally or a lot more wealth than the others. So as a result, we're getting much more Bitcoin in the hands of people like BlackRock and but ultimately, Bitcoin doesn't care. And so ultimately, the good thing is these people buy Bitcoin, number go up, Bitcoin appreciates. Everybody who holds Bitcoin gets bigger cash balances. Ultimately, it's a game and there's a scoreboard. And think about it as if you're a football team. Maybe you'd like your favorite superstar to be the one who scores the goals, or my favorite superstar, but ultimately we just want to score the goals. And the goals and the scoreboard is how big is the size of Bitcoin cash balances in the world compared to dollar cash balances. That's the scoreboard, that's what matters. And currently, Bitcoin is around $2.1, $2.2 trillion total market capitalization of Bitcoin. The dollar is about 30 trillion and dollar bonds are about 30 trillion, so that's about 60 trillion. And then all the dollar-derived currencies, all the other fiat shit coins, together and with their bonds, they're about 300 trillion. So we're still, or 200 trillion, something like that. So we still need another 100x. And doesn't matter who scores the goals. We need Bitcoin to go up so that it's more valuable than the dollar. When it's more valuable than the dollar, then everybody will want to use Bitcoin because it is the most common money. It's the most liquid money. It's the one that has the most liquid cash balances in it. And that's, for me, it's inevitable because Bitcoin is going to continue to go up. And so the value in it is going to continue to go up and fiat is going to continue to go down. Yes?
You see a use case for other chains like Ethereum and Solana?
No.
Would you see Okay, so you think eventually everything goes to Bitcoin. What do you think there's nothing else like stablecoin narrative, like DeFi, like all these other things?
Stablecoins are, I think, the only blockchain technology that I've seen, application that I've seen that works other than Bitcoin so far is stablecoins. But that is what I like to call a transitory technology. It's only going to be around as long as the dollar is going to be around, and the way things are going, that doesn't look like it's going to be for a very long time. So at some point, the dollar just continues to depreciate, and people are not going to want to hold the dollars. So at that point, the use case for stablecoins disappears, in my opinion. So I don't really see any other use case. The only thing that blockchains can do is just hold a ledger of transactions and a ledger of money. And money wants to be one, and money wants to be the thing that is the hardest to produce, as I write in Bitcoin Standard. And so inevitably, all money is going to go to the hardest money, and that is Bitcoin. And so everything else is just going to continue to survive as it currently is. Marketing narratives, VCs pump and dump. So Ethereum is the good example of the marketing narratives. Every 6 months they come up with a new bunch of buzzwords, and the hope is that they dump it on people and people buy it. And then Solana is the kind of VC model where a bunch of VCs come up with a centralized shitcoin to sell buzzwords. But ultimately, none of them does anything useful other than enrich the insiders. So maybe that use case continues for a very long time, but eventually they run out of stupid people's money, and eventually money ends up in the hands of people who know how to hold it and who know how to keep the wealth in it. Yeah.
This. We know that fiat will lose value. So what do you think about people that are doing buy, borrow, and die strategy? You know about that? So
I'm sorry, doing what?
buy, borrow, and die. We buy Bitcoin and then do Bitcoin back loan,
Yeah.
borrow and die. What do you think?
It's a very tough question. So initially for me, when I wrote the Bitcoin Standard, and when I first discovered Bitcoin, for me this was just how to get out of the fiat debt slavery game. You no longer have to borrow. You just instead of borrowing to buy your house, live within your means for several years, stack sats hard, and then you can just buy the house and not be a debt slave. And I think that's a very compelling narrative, and it's a great thing, and a lot of people have done it this way, and they've checked out from the system. They don't have to worry about their banks, they don't have to do about KYC. So like the old-time Bitcoiners that have been there for a while, they stacked, some of them bought even with cash without any KYC, and then it appreciated so much over time that they couldn't just buy houses and live their lives and not have to even tell anybody that they have money, because nobody knows how much Bitcoin they have. They're just borrowing. So that's a very nice model. But then when I started writing the fiat standard and started looking at how fiat money works, I realized that there's a complementarity between the two, in a sense. That an even better strategy than being long Bitcoin is being long Bitcoin and short fiat. That's because once I wrote the fiat standard is really when I only understood it, that debt slavery, which is the subtitle of my book, the fiat standard is the debt slavery alternative to human civilization. Debt slavery is, it's a terrible thing, but it's a better thing to do in a fiat system than not be a debt slave. So as bad as being a debt slave is, it's a lot worse, it's a lot better than trying to not be a debt slave in a fiat system, before Bitcoin at least. Because if you don't have Bitcoin, then your options are either you borrow fiat, so you're short fiat, or you are saving fiat, in which case you are long fiat. And when you're saving fiat, you're long fiat, your fiat's constantly depreciating. But when you're long, and when you're borrowing fiat, you're short fiat. So your liabilities are depreciating, and you want your liabilities to depreciate. So that's the tricky part, and I have to admit it's a very expensive mistake, because a lot of the people that have a good understanding of how fiat money works fall into this trap, where it's so abhorrent once you understand just how awful inflation is, that you think, I don't want to be part of this, I don't want to be part of this debt, it's all going to fall apart, it's all going to collapse. And so they start buying gold. But the correct option would be not to buy gold, it's to short fiat. That's what actually works. That's what works financially. But of course, the real problem with the shorting fiat is that it's very risky. If you're unable to make the payments on time, you lose your collateral. And that's the tricky part about it. So this is maybe one of the most quoted parts of the fiat standard, which is that you either lose constantly by holding wealth in fiat, or you gain by shorting fiat and being in debt, but then you are always financially insecure for the rest of your life because you're always a couple of paychecks away or a couple of missed debt payments away from losing your house or losing your business or losing some very important collateral. So it's risky, and this is what's really crappy about fiat, that you can't just decide, okay, I'm a doctor, I'm earning my money, I'm saving my money, I just want security for the future. No, you have to earn your money twice. You have to earn it, then you have to invest it, you have to borrow, you have to figure out how to play all of these games because you're essentially running on a treadmill and you can't get ahead because the money is constantly devalued. So if you stop running, you fall, and you need to keep running and you're not getting ahead. So there are no easy answers to this. You know, on the one hand, it would be, you know, it's easy for me to just say, no, don't do it, just tax ads, and it's better. But of course, you know, like, it is a very expensive mistake. I used to live in Lebanon. They had hyperinflation. When I look back at it, you know, some of my friends, for instance, they borrowed in the local currency to buy a house. So let's say you bought a house for $1 million, the currency loses 95% of its value. Your home is essentially now worth $50,000. You pay off your home loan for $50,000. So you have a $1 million house for $50,000. Well, you paid the down payment was $200, let's say, so $250,000. So that is almost as good as just buying Bitcoin. Shorting fiat can be really lucrative, particularly if inflation is very high. So, you know, from a moral perspective, I think the case against borrowing is good. From just wanting to preserve your sanity and being happy and not having to worry about this, because you never know. Because it could be that we get hyperinflation, but it could also be the case that you get a housing crash sometimes, and then you end up with a big loan, having to make a big loan on a house that is worth a lot less than what you borrowed for, and maybe you need to move. You'd like to get out of this place, and now you want to sell the house. If you sell the house, you're going to take a big hit on it, and you're still going to be owing the money for it. So, I mean, it's difficult for me to say, and it's difficult for me to give advice on it. You have to make that choice yourself. You have to decide what risks you're willing to take, and you have to realize there are risks involved in every single scenario. So if you borrow fiat, there's the risk that you get liquidated, there's the risk that you miss your payments, there's the risk that your house becomes worth a lot less. And then if you don't borrow fiat, there's the risk that, I mean, you're missing out on the depreciation, and you're going to be able to, you're not going to be able to stack as much, right? So they say you buy your house with Bitcoin or with cash, that's money that you could have stacked Bitcoin with, so you're missing out on significant Bitcoin appreciation. There are no easy answers to this. But you know, stack as hard as you can is the one easy answer there. But then how you play with the fiat casino is, you're on your own. Yes.
The traditional share market.
I'm sorry, I couldn't hear you.
The traditional share market. Like you invest in shares. So you would say that's fiat, investing in fiat, or companies which are growing versus Bitcoin. Like I'm sort of swapping from traditional to Bitcoin. Because I can just see the 10 times, 100 times better, essentially in Bitcoin long term. What do you think about traditional shares?
I think equity investing is obviously a good and healthy thing, and it's something that's going to exist in the world for a very long time. It's a healthy financial institution in a sense. Turn off the mic, please. It's a good financial institution that is going to make the world, that has helped the world appreciate capital all over time, throughout time. So I have nothing against it in principle. It's just, at this point, I think, as an investment, Bitcoin likely outperforms the vast majority of the world's equities on the long term. So for me, if I wanted to invest in a stock, I would invest in a stock if I have a pretty good degree of confidence.
Insider trade.
That's one way of putting it. But you know, you have a very good conviction in the thesis of the stock, and you think that this is likely to outperform Bitcoin. Or you know, I would put it at, let's say, 30% a year over 5 years. I think this is the kind of benchmark. This is likely an underestimation of what Bitcoin is going to perform. However, I think it is a good benchmark because, you know, Bitcoin might underperform that. So at some point, you know, obviously as your Bitcoin position grows, you might start thinking of diversifying away from it. Not necessarily because you're worried about Bitcoin. Yes, there are Bitcoin risks, but maybe these aren't very big. But I think the real risk with Bitcoin is your own Bitcoin. That's the risk. You know, the network is not going anywhere. The network is not going to crash. It's not going to zero. But your Bitcoins might be. You might mess up your cold storage. Your house burns down at the same time that the other place where you have the multisig burns down. You mess something up and you forget how to get the password. Or you have it stored with the custodian and the custodian steals them or something. So there's always a non-zero risk that you can ruin your Bitcoins. And as your Bitcoin position grows in size, then you're likely going to want to diversify into these kind of other investments, yeah.
This might sound a bit naive, so I'm just thinking, but the more Bitcoin you have, are you more likely to be people attacking and trying to get your Bitcoin? Is that unlikely? Is that what happens? Like if you become, your Bitcoin grows in value, more people are going to be trying to get it from you. No?
Maybe, although I think, you know, if you look at the last few years, I think if you came to me and you told me, let's assume for a minute that I have absolutely no moral standards, I'm a completely amoral person or immoral person, and you came to me and you told me, look, hey, I stole $100 million in Bitcoin. So I stole 10,000 Bitcoins or 1,000 Bitcoins or whatever, and I'd like you to help me launder these so that law enforcement can't track them. So I stole them from some guy, I have the private keys, I want to move them to a new place where governments won't, and this guy won't be able to find out that it was me who stole them. And you tell me, I'll give you half that money if you help me do it. I wouldn't take that, you know, even if I assume that I have absolutely no problem with theft, just simply from the technical perspective, I would not want to have stolen Bitcoin on me because I don't trust my ability to hide stolen Bitcoin well enough to want to risk my safety on it. So I would rather not take that money. It doesn't matter what the sum is. It could be 1,000 Bitcoin, 10,000 Bitcoin, 100,000 Bitcoin. On the contrary, the bigger it gets, the harder it is to hide it. And the more difficult it is for me to hide it. So I think, you know, the last few years, there were several big thefts of Bitcoin that got uncovered, like the Bitfinex hacks. So the people who did the Bitfinex hack, they had an enormous level of technical competence. They were really, really smart people who managed to break into one of the biggest, best Bitcoin companies. They managed to steal hundreds of millions of dollars, and they managed to hide them really well. But years later, they were busted. They were caught. And so if those guys can't hide it, I don't trust myself to hide it. And I don't know anybody that I would trust with something like this. So again, this is one of these other kind of worries that people have about Bitcoin that can end up making you have a lot less Bitcoin. A lot of people, you know, would have thought, well, I don't want to have a lot of Bitcoin, it's insecure, I don't want to have this much money in something that can be stolen. Maybe that's not the case. You know, maybe because of the way that Bitcoin's ledger works, and because I think what's happened really, and this is something that it seems to me that the early Bitcoiners, including Satoshi, didn't anticipate, is again what I was saying earlier about it growing in the legit part of the world economy, is that it's just growing in KYC institutions. And so now KYC institutions and chain analysis firms have a good idea about where maybe 80–90% of the Bitcoins are. And it's very difficult to find your Bitcoins behind that. There are all these ways that people think, okay, I can use this way of getting around it, but there's a record that just never goes away, and it's distributed over tens of thousands of computers all over the world. And so, yeah, you put it in a mixer and you put it with 100 people, but with every passing day, every one of those 100 people is going to be identified. You know, one of them is going to send it to Coinbase, and one of them is going to send it to Bitfinex, and then they're going to be able to track it back and figure out, okay, this came from this came from that, and it keeps narrowing the choices down. Eventually, you spend money somewhere, and then that person sends it to Coinbase. So the tricky part about Bitcoin and about money in general is that it is a social technology. You can't just take the Bitcoin and keep it, and you have to spend it at some point. You want to spend it, and when you spend it, you're spending it with another human being, and that human being is going to have information about you. So it's an interesting question. I don't know, but stay on the safe side and stacked. It's better to have stacked and lost than not to have stacked at all.
All right, so can we do one last question, because I see very hungry Bitcoin eyes all over here. They want to get some nice, beautiful steak. So let's do one quick question, and then we go to the next thing, which would be the book signing. So
right.
Quick question, and then maybe some last words from you.
Yes.
So I would say most of the people in this room know that Bitcoin is the best investment. And I guess as the rest of the traditional finance or investors wake up to this, and I guess it kind of sucks the liquidity from maybe the housing market and other places where you might be investing. Could you kind of paint a picture of what you think might happen then? Like Bitcoin eventually equalize somewhere, and then maybe the liquidity starts coming back to the rest of the world? Like, what do you think happens there?
I think Bitcoin continues to appreciate as more and more people realize it, and people move their capital away from other uses of capital. And so we get less investment in hotels and real estate and these kind of things. And I think that's a great thing. First of all, the best thing would be real estate. I think it's good that people stop investing in real estate, because currently investing in real estate is what drives up housing prices and forces people to be renters. So we have whole generations of people that are growing up to be renters. And it would be a lot better if the older people that are investing in those houses just bought Bitcoin, brings the price of houses down and allows people to become homeowners. And if you want to think of what is the most justifiable thing to spend money on after Bitcoin, other than Bitcoin, it would be a house. The best way to diversify away from Bitcoin. And I think there is a case for diversifying away from Bitcoin, because there is the risk of your Bitcoin getting lost. So if at a certain point you find yourself where the size of your Bitcoin stack is 10 times higher, 10 times the size of the value of your dream house, then you're probably over allocated into Bitcoin, because you could lose your Bitcoin and then you end up with no house and no Bitcoin. So if you can spend 10% of your Bitcoin, maybe 20% for some people, maybe 30, 40%, and get to have the house of your dreams and live in it and secure your family, then you don't have to worry about something happens to you, something happens to your Bitcoin, your family and your children will still have a roof over their head. So I think there will still be demand for homes, obviously, because people want to live in homes, but then the demand for homes as investment would die away, which is good. So that makes houses cheaper, and then everybody stacks more and more Bitcoin, so Bitcoin goes up. With equities, I expect to see something similar. So initially, we'll see this kind of passive equity investment model go away, that people who just put their money in the S&P or the NASDAQ as a way of beating inflation, they start realizing they just put it into Bitcoin, and then you start having equity investors being people who are investing in things because they understand the value proposition. People who look at the balance sheet of Apple and say, all right, I see what Apple is doing, I see where they're going, this is how I see the iPhone doing, so I think this stock is worth buying at this point. So that's going to take out a lot of the value in the equity market, which is, again, a good thing. We don't need to have all of this money floating around in all of these companies that are, producing a lot of, okay, Apple is producing valuable phones, but, a lot of these equity companies, a lot of the markets on the stock, a lot of the companies on the stock market are essentially there as as a way for people to speculate in the market, because there's a lot of captive money that has to go into markets. So that's good. And you could say here, well, that's not very good because we want capital in the stock market, because that's how we get things. That's how we get phones and machines and all of the products that we want. And that's true, but money going into Bitcoin is also going into investment, but it is going into investment in something that's a lot more valuable than anything that any company in the world is doing, which is a money that replaces central banks. So that's for me more valuable than iPhones, than Nvidia, than Facebook, than Google, than all of the dating apps, all that stuff. Having a money that can't be controlled by central banks, it can't be inflated, it's a lot more valuable. So moving capital away from the 15th dating app to Bitcoin is a good thing. Even moving money away from Nvidia and from all of the stock market, they have far too much capital compared to Bitcoin. Bitcoin's only $2 trillion. It needs a lot more capital. And but the big one, the really good one, would be bonds. That's the jackpot. Bitcoin wins when it kills the bond market, and when there are no more bonds, and when our children laugh at us for having lived at a time when people invested in bonds, because bonds are, you're just lending money to the government, and the reason you lend to the government is because the government can extort people to pay you. So you're investing in extortion. It's a criminal racket, and it's horrible, and it's what keeps the inflation scam going, and it's your way out of the inflation scam, or a way to protect yourself a little bit from the inflation scam, although it hasn't been working well over the last 5 years. But hopefully the next 5 years will be a lot worse for bond investors, and I think that's the best thing. If we bankrupt governments, destroy the bond market, and then force governments to become fiscally responsible, that is a truly beautiful, wonderful thing. But at a certain point, when Bitcoin eats enough of the real estate market, enough of the stock market, enough of the fiat money market, and most importantly, enough of the bond market, it becomes big enough that it appreciates a lot, and then, that I think is the tipping point in the S curve, where we move from slow growth, as we've been going so far, to just one big giant move up. And I think that's really, that's the bond market. That point where we overtake the bond market, I presume that's likely going to be a very fast tipping point. Because once we go to being the biggest, most liquid asset in the world, then all of your friends' stupid reasons for why they don't want to buy Bitcoin become irrelevant. Even if they don't understand Bitcoin, doesn't matter. It's the biggest currency. They will use it for the same way that people in Venezuela use the dollar. They don't understand the dollar, they don't understand what Jay Powell is doing, they don't understand any of that stuff, but they realize this is the most liquid money, and if you want to eat, you have to use the dollar. So at that point is when we get that tipping point. And after that, then the returns on holding Bitcoin are going to decline significantly. Once the python has swallowed the cow, there's just not that much left to eat. So then the returns will be maybe 10% a year, 5% a year, 7% a year. At that point, equity and all of those things become a lot more attractive. So I don't think the real estate investment model returns. I don't think government bonds return, but I think equity returns after that.
Thank you very much, Saifedean. When you said that Bitcoin will catch the bond market, I was imagining this guy, like Bitcoiners standing in front of the bond market, standing in front of the central bank or whatever, and just destroying it, because this is what Bitcoin is doing. So thank you so much. It's really an honor that you are here, that you come to Bali, and thank you very much from all of the guys, right? We have so many people, the same as we only spent a little bit of Satoshis to get this thing. We have so many people that said, I want to really visit one day in my life and meet Saifedean Ammous. They said, okay, I better stack sets. If he's coming back maybe next year or in 2 days or years or whenever, then I will meet him. So, but a few came from Java Island, from many other places. And so thank you that you are here, and thank you that you take your time. Thank you all guys that you asked so many questions. This was awesome. And now the next thing on the agenda would be the book signing session. So if you guys are all ready, then Saifedean Ammous, you could go over there to the signing place. And yeah, you guys can follow, and we can do 2 groups, right? First, one group that will go. Oh, thank you again, Saifedean Ammous, for being here.